Hello. Good morning, and thank you guys for the stamina, and hopefully we get a few more people coming in. Last day, almost last presentation, so great to see you. We will be talking about, we talked a lot about the problems, we talked a lot about technology over the last couple of days. So we're going to be talking a lot about opportunities now, opportunities of embedded payments, and opportunities that it brings both to the banks and to the fintech. So I'm Marcia Cilliers. The reason I'm doing this is that I've been in payments for over 30 years. I'm a board advisor consultant and also kind of a non-exec director and do various other roles, but I've really loved the fact that our industry has now become so kind of cool, even like teenagers. My daughter knows about fintech, and 20 years ago, I had to explain what I did for a living. People thought I worked for a bank. So it's become cool because there are services facing people every day, and it's become more known. So today we'll be talking about these opportunities for both existing and new players. We will have a presentation first for 15 minutes, and then we will have a panel, and we will welcome your questions at that panel. But now I'll invite Charlotte to do her presentation. Thank you.
Thank you very much, Masha. So welcome everyone to the panel and presentation on embedded payments. So I'll do a very brief introduction about myself. So I'm Sarel Tal. I'm a principal at a company called Flagship Advisory Partners. So we are a boutique consultancy firm focused on payments, software, and fintech. So we are spending tons of time in embedded payments and embedded finance, and so that's really a topic that gets us really excited. And so today I will be sharing insights on why embedded payments are effectively reshaping how SMB payments are being sold and delivered, mainly driven by software platforms. And I will also be speaking about the massive value creation opportunity and revenue opportunity for software platforms, for ecosystem providers, for fintech, for PSPs, for banks. I will also be mentioning a couple of lessons learned in the US and drawing the comparison with where we stand in Europe and in the UK. So effectively, if you look at the market today, specifically the US market, it's where the embedded payments opportunity is the most mature. So what we estimate is that between 44 and 66% of small and medium-sized businesses effectively bought payments through their software platform. The remainder of the business buying via PSPs, ISOs, and other forms of channels. If you now look at Europe and the UK, we are a couple of years behind the US. And so that's both the case on the e-com side, that's both the case at a point of sale side. Now again, that's also an opportunity, right, for fintechs, PSPs, and other system providers to effectively still position in this space. What is really important to understand is effectively embedded payments is very much an SMB play. Because if you look at the enterprise space, or like enterprise merchants, they're pretty much sophisticated as it comes to buying payments and software. So they usually have a small team dedicated to procurement, buying payments, buying fraud, and other forms of services, and effectively really buy payment software on a very much unbundled basis. However, if you look at micros, if you look at small, medium-sized businesses, it's very different. They're highly unsophisticated. So none of them is effectively going to spend a lot of time comparing options. They want a solution that is easy to enable, that is quick to enable, and effectively, as such, are less price sensitive than enterprise merchants. Our research also evidenced that 80% of SMB merchants are effectively buying payments and software from the first provider that they encounter. Again, just like highlighting the big opportunity that it represents if targeting SMBs because they're so well positioned in the merchant buying lifecycle. So as a software platform, you have this massive distribution advantage because at first, once you sort out the shop location, once you bought your equipment, once you bought inventory, then you are first buying the software. So payments are only a follow-on purchase because software is really the brain of my business. And so again, that positions software platforms uniquely in the value chain and in the merchant buying lifecycle. And so not only are they uniquely positioned in the merchant buying lifecycle, what is also very much evidenced is effectively software platforms are increasing the utility of their software package, right? Because you go to a merchant with a one-stop-shop solution for both payments and software, potentially at a later stage also broader fintech services. So it's a single point of service. It's a single point for like data, reconciliation, billing, settlement, and business insights. It's also much more easier for an SMB merchant to effectively train the employees because you don't need to train them on like 2 different products. And it's much more quicker and easier to enable. On the other hand, for the software platform, you also massively increase your revenues. So you have higher retention because you upsell additional products. You also increase the lifetime value per customer. And the revenue potential has been proven across a lot of different verticals and horizontals in the markets. So for example, if you look at Toast, which is a leading US restaurant SaaS, they're now generating over 85% of their total revenues from payments and fintech. If you look at Bill.com, a leading AP and AR provider in the US, very similarly, generating 85% of their revenues from payments and fintech. We also have a couple of European examples, notably Muse, that has been incredibly successful embedding payments and broader fintech products and is now generating 76% of their overall revenues from payments and fintech. And that's really exciting because we have a lot of playbooks across different verticals, different horizontals. And so the proven monetization potential for the software platform is massive. Now, what is also important to understand is when a software platform starts to embed payments that don't directly jump into the Toast or like the Shopify buckets, it's really about a life cycle. So what we usually see is the software platform is first in a stage where they have relatively loose integrations or like, partnerships with payment service providers, but then very quickly start to realize, geez, I can make a lot of money out of payments. And then suddenly want to effectively move into the integrated or embedded payments buckets. So what you will see as they kind of scale through their maturity of embedded payments journey, they will want to own the brand, they will want to control the commercials, they will want to effectively own the customer even more throughout the journey and take much more of the components in-house. And then like really at the later stage, effectively operate as a fully fledged fintech. But again, it's taking years because once you enable the product, you also need to learn how to sell it, right? And it always comes down to the point where you first need to nail the first use case before even moving on to the next. And that's a good example with Shopify. So Shopify was probably one of the first software providers that effectively launched embedded payments. That's already back 13 years when they started in 2013. Started with their own branded payments proposition and then waited 3 additional years before launching the next use case, which was merchant cash advance. They then, again here, tried to learn how to sell the product, waited 4 additional years before moving on to the next product. And now, 13 years later, they just started to operate as a PayFac in the US. So it's a proper like evolutionary curve. And what we also see a lot with software platforms that they kind of move into integrated, so like embedded payments, it's effectively a complete change to their business model. They're really good at selling software. Payments, again, is something completely different. And so again, really comes down to how do I go to markets? There are also several ways on how to play in the embedded payment space. So you have different operating models that are now available to software platforms as they think about their journey towards becoming much more sophisticated within the payments domain. So what you see here is like most of the providers in Europe and in the UK are still in the basic referral buckets or like referral with integration, meaning again, it's a quite loose integration. The next steps, usually as you think about embedded payments, is to go down the route of what we call pay-for-clients. So it's where you effectively really start to own your payments proposition, where it's branded under your name, where you start to own like much more of the different components. You are the one providing first customer service support, etc. Pay-for-clients is where like most of the US market is today. And we see a clear shift in Europe as well, where like increasingly software providers will want to move into the pay-for-client buckets. At the very end of the curve, you have the full pay-for model, which is essentially the software platform completely operating as a payments company and essentially owning pretty much all of the value chain components. That's not even a model that is highly mature in the US, just because you need a lot of scale. So for example, what we usually say to our software merchants, it really comes down to you having at least like 1 billion to 5 billion of flows on your platform before you even can think about the full payback model. Having said that, you know, the more increasingly you go down the routes of operating models, the greater monetization potential and revenue potential you also generate. But again, you completely change your operating model because ultimately, if you were to go down the route of a full payback, you also have like, you know, a lot of OpEx, you completely change, you know, your organization, etc., to again, like really operate as a payment service provider. When we look at the maturity of embedded payments across different verticals, and if you were to contrast that between where do we stand in the US and where do we stand in Europe and in the UK, what is really interesting is that we aren't that far yet in Europe. So again, it's a massive opportunity for payment service providers because ultimately there are a couple of verticals that are relatively mature, but there's still a lot of white space. So if you take, for example, web shop platforms, so the likes of Shopify, Wix, WooCommerce, so that vertical is already highly mature, and that ship already sailed for like a lot of different payment service providers. That's really owned by the likes of Adyen, Stripe, PayPal. But again, if you look at the broader landscape, verticals and horizontals, there's still a lot of white space to be captured. We oftentimes also get asked the question, is embedded payments and finance opportunity equally the same across regions? And so it is. There's a lot of revenue to be generated from payments, but also broader core financial services. But it's still slightly different. And it's different because if you look at Europe and in the UK, the ISV landscape is much more fragmented to start with. Second, we have different payment mixes, right? So for example, if you look at in Europe, it's much more bank-centric. So you have a lot of account-to-account payments, etc. So again, the monetization fundamentals will be different versus the US market that is much more card-centric. And then lastly, from a regulatory perspective, again, if you want to go down the route of a full payback, ultimately you also need to register as a PI or as an EMEI in Europe, which is not the case in the US. Lastly, embedded payments is usually the first product where software platforms start to integrate or like embed into their proposition. That's also a function of the fact that you have much more fintechs and PSPs actually helping you to do that, versus other products where we're seeing like, you know, increasingly fintechs emerging. But what's important to understand is like embedded finance is an end target state of multiple products. It's not just payments, but it's lending, it's banking, it's payouts, it's cards. And so think about the end target state as this multi-product as you go to market in the future. And so again, like if you look at commerce software, like horizontal software, each of the different verticals or horizontals will have like a different set of use cases. So the sequencing is not always going to be the same, but it's still equally important. So just to summarize, a couple of key takeaways as we think about embedded payments. So I think software platforms are really reshaping how SMB merchant payments are being sold and delivered. There's still a lot of opportunity to be captured by PSPs, fintechs, as they kind of serve software providers. The US has a lot of different playbooks around proven revenue opportunity. And we're also seeing a lot of different European case studies arising. And then lastly, again, keep in mind, it always comes down to like nailing the first use case and then moving on to the next. So it's a proper life cycle that you're going through. So I hope I was able to shape and to provide some insights as it comes to embedded payments. Again, it's a space that we really, really like. And I'm also looking forward to the panel discussion, which will give different perspectives to the same topic. Thank you very much.
It is the last day, and as always, it's been a tradition here in Berlin to have some sort of strike when we're here for the MPE. So it's just it doesn't fail this year. That's good. I like it when things stay the same. I guess what I'd like to do is, for my panelists, if you guys can introduce yourselves briefly, but tell me also a little bit more why you're interested in embedded payments and what you or your company are doing in that. And then we'll start with the questions. There will be opportunity for you guys to ask the questions. If you think of something throughout my own questions or our conversation, please add it to Slido. I can see it over there, so I can weave it into our storyline, or we can read it out, especially depending on the questions. So, Sarel, we'll start with you.
Good morning, everybody, and again, thanks for joining us here on the last day. My name is Sarel, and I run the partnership business at Rapyd. Rapyd is a fintech as a service company and also a payment company. We're financially regulated across multiple jurisdictions around the world, starting from Europe, UK, Singapore, Hong Kong, Israel, and Latin America. And at the same time, we're also principal members of Visa, MasterCard, and American Express across these jurisdictions for card acquiring and card issuing. And obviously, as one of our core services is embedded payments and embedded fintech, and I think we'll kind of dive into the differences as we move forward in the discussion.
Thank you. Henri.
Hi, everyone. My name is Ondřej Buben, and I'm Chief Commercial Officer in Shopted. Shopted is an e-commerce platform that helps merchants to start, run, and grow their businesses. We are based in Prague. We support currently over 40,000 merchants in Czech Republic, Slovakia, and Hungary. I have joined Shopted about almost 5 years ago, and my main mission was to create an embedded payment solution, which I did. So we currently have a Shopted Pay solution where we have embedded payments. We are using card acquiring, PSD2 services, QR codes, and similar. And we are supporting over 15,000 merchants currently on our platform. And about 2 years ago, we also added embedded financing solution that we call Shopted Boost, which helps our merchant with short-term loans for their short-term needs of goods, marketing, or anything like that.
Okay, Hemlata.
Good morning, everyone. I'm Hemlata Narsaman. I'm the European president of Elevon, and I'm also the global head of our newly formed Embedded Payments Partners Group. It's nice that at least a few people got out of bed to hear embedded finance this morning. In terms of Elevon, we are a top 10 processor in Europe in terms of volume. We're also in the US. We're a fully owned subsidiary of US Bank, which is the 5th largest bank in the US. So we have an acquiring platform across US and Europe. We're a full-fledged acquirer. We're a fully licensed bank here in Europe and in the UK. And I think when it comes to embedded finance, for us, it's a very interesting opportunity. As an acquirer, the idea of embedding payments into one of the fastest growing channels is, of course, very appealing. But more broadly, we think we have a unique set of assets and capabilities in terms of our banking presence. And really, the challenge or the journey for us is how we can bring the best of those assets and capabilities into this channel and both defend our core business, but also find new avenues for growth.
Thank you. Charlotte, you've already introduced yourself, but maybe you can tell us what kind of part of how big is the embedded kind of area for your consultancy, for Flagship Consultants?
We are really spending a lot of time on the broader sets of embedded finance products, just because, again, a lot of software providers are really coming to the realization that embedded finance is a must. That's also the case, obviously, as you think about AI disruption within software, which has been a big topic in 2026. So that, again, the more that you can really bundle payments, lending, banking, accounts, payouts into one proposition together with software and go to market with that, that's extremely powerful. And we've seen, having also worked with software providers that effectively have launched that proposition into the market, it's a clear feedback from the merchant base as well that's well received and that this is a must. So the days of standalone payment software are really coming to an end now. Again, that's already much more mature in the US, but that's also the case in Europe and in the UK accelerating.
Okay, thank you. So I guess one of the things I want to make a little bit clear for myself and hopefully the audience is, what do we, where do embedded payments start and where does it end? What's the definition of it, maybe? Sarel, do you want to have a go at the definition?
Yep, happy to. And, as Rapyd, we're very strong in the ISO, ISV, PayFac market. And I think we cover the largest ISOs and PayFacs across Europe and the UK. And I have a kind of, I think, a little different view of the vertical and horizontal, this description of embedded payments, and I also differentiate between payments and fintech. I think when you look at embedded payments, it's integrating payments into a third-party provider like an ISV, a booking system, an ordering system, anybody to provide some kind of a software service. And as we've seen in Charlotte's presentation, that accounts for 90% of their revenue in the US. But for an acquirer, for a payment provider, we're really exchanging margins for a distribution channel, because we could have, if we would have been selling these acquiring services to the merchants, we would take 100% of the margin. We're selling this and we're sharing now our margins with the ISV or the embedded payment provider. We're just basically buying distribution, which is a great thing, which enables us to scale. So this is what I would call vertical payments, embedded payments. The additional advantage, in addition to distribution channel, is the now ability to move into embedded fintech and start providing additional services to these merchants and to these providers, like lending and other services, which basically increases the book of business that we are actually sell. So this is kind of the way I see it. It's vertically, it's payments, which is basically distribution. Horizontally, it's the additional service that we provide to the marketplaces and the other providers.
Okay, then thank you for that. So I think then, Henri, so you, again, as you explained, so Shopify is kind of a Shopify to a degree. Did you build the embedded payment services because of the demand? So did demand come first? I was trying to work out where the chicken and egg is there. Did demand come first? Or did you think, well, actually, it's a good revenue, so we're going to push it out? Or could you take us through that?
Yeah, I would say that it was definitely the demand. It wasn't demand that they want embedded payments. The demand was that they were struggling with the payment providers that were in the platform as a plugin or other connection. So their main struggle was that, for example, onboarding and activation of the payment service took at least 2 weeks, sometimes even months, to get onboarded and have the payments activated, which was painful. Also, as it is just an SME segment, basically the payment providers were looking down on our small merchants. So we wanted to help them because our idea is that we want to help everyone to succeed, whether they are starting, whether they are already growing. But for our merchants to succeed, they need to have the web shop, our solution, but they need to have payments nowadays. So we wanted to solve this issue for them so they can have the payments from day one. That was our goal, and it was also very important when we were creating the embedded payments, when we had the discussions with potential partners, that we will be really able to onboard the merchants in a matter of minutes or hours, not days. So.
Okay. So I guess the cash flow is then what you're saying is quite a big issue for a lot of merchants. I guess. Maybe Himlata, can you tell me from your experience, because Elevon's got very broad selection of merchants, and you do some of the biggest airlines, but you also do quite a lot of SMEs in the UK. Do you think embedded services are more required for SMEs or for enterprise or both? And could you compare the sizes, I guess, of organizations and their demands for financial services?
Yeah, great question. I do think there's quite a difference in the way that SMBs look at it and enterprise merchants look at it. And Charlotte, I know you covered obviously what we see in the SMB sector. I will say in SMB, it's very clear. I think as Charlotte laid out, it's convenience driven, it's one-stop shop. It's it really, embedded payments from our standpoint is the payments become part of the business workflow. It's not a separate thing. It's not a separate add-on. It's really part of that commerce flow, and that's really what SMBs look for. Interestingly, we do see demand from larger enterprises as well, and it typically comes through, it might be their ERP provider, it might be the SAPs and the Oracles in the hospitality industry. For example, we saw the success of Muse. Muse is a property management system in hospitality that has grown incredibly rapidly, because one of the big pain points in hospitality is the F&B system doesn't talk to the room reservation system, doesn't talk to the spa systems, right? And you actually sometimes have fragmented providers even at that level. So even in the enterprise segment, actually, we're starting to see a demand for unification, easier workflow, reconciliation. Lots of treasury and accounting departments talk to us about the pain point of reconciliation. So I think there's also a demand on the enterprise side. It probably comes through a different avenue. So again, as an acquirer that serves both those segments, that's multi-market, multi-region, I think we see a space in also tapping into that and using our gateways, using some of the other financial products we have to actually provide some of those areas that are pain points, even in the enterprise segment.
Okay. So I guess, Charlotte, your consultants, have you guys estimated the value of the embedded services marketplace? We're talking trillions. Do you have any ideas? I guess Europe and the US, you've talked to how the US is quite far ahead, I guess, in that. So maybe there's some lessons for us to learn in terms of what volumes to expect.
Yeah, so it's really in the trillions. So I think as we think about embedded finance and the market size, what is also really interesting is payments is obviously one of the largest revenue pools as you think about embedded finance. But we also see lending as an equally and actually like somewhat bigger revenue pool as you think about embedded finance. Now, for example, lending comes with a lot of different products, right? So it comes with merchant cash advance, can be unsecured term loans, instant settlement, etc. I think overall, it's a massive market. Again, via software platforms, but also other forms of corporates. And Himlata, also laid it out really well. We're already seeing also in terms of enterprise segment, select verticals being very demanding after embedded finance. So I think it's massive.
Okay. So I guess, if you think about in the system, in terms of definitely in the merchant acquiring side of things, there's only that much that merchants are prepared to pay for their payment services. So for payment service providers, you either have to onboard a lot more merchants to grow, or you have to charge them more. And as I said, at some point, that's not going to go any further. So indeed, it seems like great opportunity to start building those revenues. But do you think that kind of acquirers look at it in that way? Do you think that it's, or is it more the fintechs that are thinking about it? I guess, Sarel Tal, looking at you here, how do you perceive that opportunity?
I'm worried about being put in the traditional acquirer category, but I'll lead off anyway. I think the beauty here is actually the stickiness and the customer proposition. You know, my belief is if you're offering good value to a customer, that's the best thing you can do wherever you play in the ecosystem. So from an acquirer standpoint, partnering with successful software players who are becoming increasingly critical to the end merchant is an absolute win for us. You know, why wouldn't we do it? That's going where the market is going. What's really interesting is being more embedded into software actually leads to stickier end merchant relationships for us. And that is a huge value, because when you actually look at economics over the lifetime of a merchant, that is where the real value comes in. You know, typically in SMB, you have very high churn rates. You could have anywhere from, 10 months to 18 months. Enterprise, we're fortunate we have a book of enterprise customers who've been with us 25 years. And I think the thing about being embedded into software and actually adding more value-add services is you take that lifetime customer value significantly further. And actually, that is how we look at the value of it. It might be that there is some margin attrition in the near term, absolutely. I think ISVs do take some more of that revenue in the value chain. But I think the long game, the ability to offer more services and the ability to have stickier merchants is where that value comes in over the lifetime.
Okay. I mean, I definitely have seen in my past, I worked for companies like Global Collect in the past, where actually, I mean, it wasn't quite about embedded services yet, but I know we've made more than half of our net profit from FX than we did from the actual payment processing. So that was kind of a new service at the time. Things have changed quite a lot since then, but I think it'd be quite interesting to understand, maybe, Henri, from your point of view, I guess, do you, as a platform, do you make, do you get revenue share from these financial partners that you've integrated, and has it become a significant part of your overall revenue?
Yes, it does. Basically, in all our contracts that we have with our partners, we are keeping the control over the pricing. So we basically have a cost from our partners, payment providers, and we are adding our margin on top of it. So we are in full control of the pricing for our merchants, and it generates, I don't know, maybe now we are about 20% of our revenues, and it's growing every year.
Okay. So I want to explore the point Sarel mentioned, kind of about the integration, Sarel, with you in terms of, I mean, to me, it's also a data game, right? If I'm a small business or medium business, in fact, any business, and then I'm applying for trade credit, I have to fill in a lot of forms telling them what my volumes are. Obviously, if you have these volumes, you could just pass it on to them with my permission. So, first of all, you kind of, and all this exporting, importing, you get errors in it. There's human factor to it. How do you guys see this? Because you work with a lot of partners of embedded services. How do you see that data game? And are you using the data from transactions for these partners to provide financial services? If so, how is it happening now?
Yeah, but before that, I want to make another comment with respect to servicing ISVs, and I see there's also a question here on Slido with respect to, can acquirers provide a white label solution to their partners? And I think once you start working with partners, it's a very different mindset from an acquirer point of view than serving merchants, because we no longer serve the end merchants. They, in many cases, don't see the acquirer. We're a real white label provider to the partner, and the focus is on serving the partner and enabling the partner to provide their services to their customers. So it's a completely different mindset. And at Rapyd, we have a specific business unit that focuses on selling to partners versus another business unit sells direct to merchant, which is a completely different business. With respect to your question, obviously we sit on a lot of data, and financing or vendor financing or vendor credit is one of these areas where you can provide a lot of value, because you sit on the data flow, and on the other hand, you sit on the funds flow, and you can balance with these and provide cash in advance and other services to the merchants. But it goes far and beyond these capabilities, because the closer you are to the customer as an acquirer through the embedded services, you can add many more additional services, and I'll give you 2 examples. A shopper is and the shopper transaction fails for various reasons. We can immediately today, with AI, send an SMS to the merchant, hey, this transaction failed because of A, B, and C. Please correct and rerun the transaction, and they win the business. So this is one example. You can see that a customer has abandoned their shopping cart. You can then initiate a phone call, an AI phone call to the customer. Hey, we've seen you've put this product in the shopping cart. We've seen you left the shopping cart. Is there anything we can help you? Is there anything we can do to assist you to complete the payment? We can give you, to a certain extent, a discount if you want to buy it now, and then we can send them a payment link to the buyer's cell phone with the updated pricing. So there's much more you can do to extend the end-to-end experience of the end customer when you sit on the combination of the transaction flow and the shopping cart. This is one area, and the other area is we talk a lot about embedded payments in the online world, but it's also embedded payments in the the card-present world. Take, for example, I think everybody here knows FlatPay, which is the fastest growing ISV across Europe these days. FlatPay would not be able to scale to where they are if they did not have an acquirer behind them that could approve and KYC their merchants within 35 minutes. For a typical onboarding of an SMB merchant, it takes 3 days on paper, a week to 3 weeks in reality. And FlatPay would not have been able to scale without this ability to KYC merchants at scale. At the other hand, they will not be able to scale across the multiple countries they operate if they did not have an acquirer that can really support them locally across different countries, including, for example, Europe and the UK, which are completely 2 different licenses. So there's more to it than just the embedded. It's these additional services and the intimate integration of the flow that creates the value for both the end merchant, the customer, the end merchant, and the ISV partner.
Okay. No, thank you for that. And you've touched upon kind of onboarding, and there's a question there about contractual ownership of a merchant. So I think, Andre, I know you've raised that in our prep calls. You were talking about the kind of the liability shift. How are you guys dealing with this practically? So who is responsible? So if your platform, somebody has bought something and got a loan to buy it, who's responsible for the customer first? And the second part, if you can enlighten me on how you do, how is the KYC done? Are you passing on? Is there some sort of trusted identity that's often talked about?
All right, so basically we don't have any license. We are not a PayFac. We are not licensed anywhere. So when we are looking for a partner, we are looking for someone that will basically borrow their license that we can use while we are still keeping our relationship with the merchants. And it's as wide label as possible. So for example, for the card acquiring and local payment methods where we have one partner, our customer, our merchant, goes into a contractual relationship both with us and both with our partner, but it's so seamless that they don't even realize it. It's just in the terms and condition, so maybe they sometimes discover it in the payout, so they can see the bank account of the provider, but otherwise they are not really aware about the third party that they came into the contract with. And that's how we usually put it with most of our partners, so we are keeping the whole relationship on our end. We are providing a whole support model, so first line, second line, everything. So even though our merchant will discover, okay, there's a third party, I will contact directly the third party. They will not be able to communicate with them, even though they will contact them. They will say, no, you need to contact ShopTet, you need to deal with ShopTet. So we are keeping the whole relationship on our end. Regarding the KYC and how we are sharing those information, we created the system where we are collecting as much information as possible from public registers regarding UBOs. We also have some data about our merchants in our administration as well. So for initial onboarding, that's usually what's necessary for PSD2 services. They are going through AIS as well. but thanks to staggered onboarding, they don't need to provide us with the personal IDs at first. So you will activate the service at the beginning. They can start processing the payment, and if they will go over the threshold of like 1,000 euros, they need to provide personal IDs, where we are offering basically two options. They can use our interface, and we will just pass it through to our provider, or we can even have a redirect to a hosted onboarding page, so they can feel safer, but they usually prefer to do everything in our interface.
Okay. Yes, I wanted to ask you also with the context, if you can add to your response about, you guys are a very well-established bank, right? So if you're using, if there's smaller providers who are providing services through you, are you not worried about the compliance and liability that may fall into your court?
So I was actually just going to I'll frame that in terms of how we look at the customers as well. As an acquirer, we do own the acquiring relationship with the end merchant. And actually, it's interesting, one of our partnerships which we announced publicly is with WooCommerce. Again, huge e-com platform, very big in the SMB space. And actually, one of the things we discussed with them was the importance of how we handle their customer. So as kind of a large acquirer, one of the big things we can do is make that process seamless for in WooCommerce's case, for instance, for their customer. And we do that, again, by having seamless onboarding, pre-filling as much of the information as we can from the partner. But, I wouldn't underestimate, especially when you have larger, it may not be as true for micros, but certainly in the mid-market segment of merchants that we often board, the value of actually having 24/7 service, the value of not having, a credit holdback, the value of having a dispute and chargeback management service, those things are actually very appealing. So interestingly, we are finding that this kind of best-of-breed proposition that we can bring with the value that a software partner brings actually gives more benefit to the merchant as well. I think, in terms of the very micro space, I'd say, as a bank, risk and compliance obviously hugely important for us, and we're not going to change those standards, but I think the idea is, can we digitize it, and again, can we make that end merchant experience as seamless as possible? That's really where our focus has been when we work with platforms. So, kind of like that question, is there a space for other players? I absolutely think there is a space for other players. It is quite dependent on what segment you're targeting, what market. For some partners, having a platform that works across Europe and North America is very appealing. So, for instance, we're able to play in that area as well.
Okay. Thank you for that. Yeah, Charlotte, and then also if you can maybe pick up as well on that, on one hand, yes, it's a challenge for the acquirers to work out that responsibility balance. On another hand, to that second question, there should everybody be prepared for it, and should everybody kind of add, all acquirers add various partnerships and integrations?
Yeah, absolutely. So I think what we've seen over the last couple of years is a lot of PSPs, fintechs, realizing that if you don't position with software providers, you're effectively losing out at some point. However, if you actually look under the hood of, how PSPs and fintechs support software platforms, in some cases they only support a specific use case. So they can literally just support the referral stage, but actually cannot properly white label or even support the full payback model. So what is really important, and one of the key takeaways that I want to give to the audience today is, if you were to target ISVs, you need to be much more flexible in the operating model use cases that you support. And that's also what Hemlata also just described, right? You want to be able to support them in the referral stage, and then you want to actually grow with them across the evolutionary curve as they become much more mature, and where they will want to own some of the components of the value chain, and then eventually supporting them as they grow into a full payback. And actually even some of the largest providers that are well positioned with ISVs today can even support some of the models. And then lastly, again, flexibility is key. What we also see is there are adaptations in the operating model. So in other words, for example, today you have the payback light model, which is relatively standard, but we also see some platforms saying, we don't want to register as an PI, or like we don't want to become, get an EMEI license, but we actually want to own like some of the risk. Would you be open to that? And so I think that's also like, the challenge for like PSPs, acquirers that are actually targeting the space, being much more open in terms of operating model. And it's still very lucrative, by the way, because a lot of volume is going to come via the software platforms in the future.
Okay. So a question, I'll probably have Sarel, maybe you, and if anyone wants to add in terms of, I think it's been mentioned, Imlat, you've mentioned, it depends on verticals. So if I turn this around and say, well, actually, are there verticals which need embedded services more? I mean, your colleague Charlotte yesterday talked about accounting, for example. Have they, accounting firms have built in a lot of things because there's a lot of data going from one place to another. It opens account, it makes sense, you get loans. So are there any verticals that you guys see as an acquirer and as a white label acquirer that are kind of really embracing the embedded payments more than others?
It's an interesting question, and I think the differentiation that my colleague made here about, the larger enterprises are more focused on, their ERP integration, because that's kind of the entry point and exit point of funds into the organization. And this is where, the big enterprises are looking into the integration. On kind of the SMB or the other verticals, I think it spans across almost all verticals. We see this in hospitality, we see this in booking, we see this also in the car industry. Yesterday, Bumper here, one of our partners, won an award where they provide these services in the automotive industry and provide payments and credit when you walk into a garage and you need to fix your car and you get a bill for 1,000 euros or 1,000 pounds and you want to pay it in like a BNPL, and they provide these services and they move that business into acquiring as well as open banking. So I think it spreads across all the verticals. One other comment I'd like to make is with respect to this maturity of them from moving into an ISV and then becoming into a PayFac. I must say that we're heavily invested into this space, and I haven't seen cases of a real ISV that is growing, moving into becoming a PayFac, because they understand that it's a completely different game moving from a non-regulated entity to a financially regulated entity. It really changes the focus of the business, the cost of doing business, and usually they want to keep on focusing on their core business, adding additional payments and fintech services into their business, but not going through the burden of being financially regulated. I think the only cases that we've seen an ISV becoming a financially regulated is when they were acquired by an acquirer or acquired by a already financially regulated an entity. So at least on our end, we don't see the risk of growing these businesses until they kind of become their own PayFac or acquire. They focus on their business and they do that, and for as long as they go.
And I guess those are kind of, again, I've been in the acquiring business for 20-something years now, and when you think of merchant, everybody kind of, even on the presentation said retailer. Merchants are not, the small percentage of merchants are retailers. A lot of merchants are actually doing a lot of other services, and as you said, and they're probably, the retailers, in my mind, is kind of less of a demand for, services, embedded services, unless it's loans or buy now, pay laters. But I think, I guess, Himlat, a question to you in terms of, as Elevon, as a US bank, obviously the competition is stepping on your toes. So the likes of Stripe actually has all of that themselves. They build all of the embedded services. They offer all of the services themselves. Is that something that's putting the wind in your tails? And can you talk a little bit about how you see the competition is working in that sector?
Yeah, I think one of the favorite consulting slides, I'm sure Charlotte would have seen too, is you've got a big chart by vertical and you've got competitors coming in from everywhere. So it is like that. You've had digital first competitors who are coming into financial services. You have players like us who are financial services first, trying to move into digital. I think what it comes down to is you need to know what you're good at and what value you're going to bring. I'm not going to say that we will be the solution for everyone, for every platform, for every merchant, but there are areas where we believe we are quite competitive. I think the case of different models, we hear that a lot, like platforms going from referral models, talking to us about, well, would you be open to white label? Would you be open to PayFac Lite, and so on? So having the scale and balance sheet like we do to have that kind of conversation, we think is good, because it does often, with an ISV, very quickly become a financial conversation around, okay, how do we add, to your revenue per user? It's quite interesting that many software players are actually trying to maximize the top line revenue. It's not really trying to get fee or commission revenue. It's more impactful to actually have gross revenue. So once you understand what the motivation is for them, I think you can have that kind of conversation on what are we good at, what are you good at, and where could it come through. I think with PayFac, I completely agree with Saul's point there that, I say it's a bit like wedding vows. Don't go into it without thinking seriously, because it is a huge undertaking. But that has created an opportunity in providing PayFac as a service. Again, for a bank-owned acquirer like us, it's a great way to monetize the risk and compliance we have, the settlement capabilities. Moving funds is not an easy thing. The amount of connections you need to actually run settlement in a very short, almost real-time basis, that is a point of differentiation. So we talk about being connected to faster payments in the UK, instant settlement, SEPA settlement across Europe. We have Zelle in the US, where we can pay out to a merchant using their phone number. All of those somewhat traditional capabilities become strengths here too. So I saw some McKinsey research where one of the fastest growing embedded finance services in the US is actually deposit accounts. A lot of SMBs, almost half of the SMBs, actually consume a deposit account through their software platform. Then you have BNPL accounting growing rapidly as well. Chargeback management is also kind of emerging. There's emerging demand for that. So, I think you need to know where you're good at, where you're coming from. And I think there is that opportunity to find the intersection with the right software platforms, with the right customer segments. And I don't think it's one fit for everybody. So at the moment,
a la carte rather than a set menu approach.
I hope it is a la carte, exactly.
I think to the question there's a question about the license, whether you need a license in the US and on Europe. I think, from my point of view, I think that, we've got here, Andre, with providing embedded services, but they're not licensed. You don't have to be in the flow of funds, I guess, to provide embedded services. Do you guys agree with that opinion?
Yeah, exactly. I cannot be in the flow of funds. Otherwise, I would need to have a license. So we are doing our best to keep ourselves out of the funds as much as possible, which is working quite well so far. I would also like to go back into the offering, like when we were discussing 3 years ago, what potential providers we can have or we cannot have, or I was approached on events like MPE, hey, you have over 40,000 merchants, we want to go to your platform, can we create a plugin or something like that? And I was like, okay, and are you able to provide a white label solution for us? And I must say a couple of years ago, even 2-3 years ago, that's where the conversation usually stopped. And it was good because I didn't have to deal with all of the sales guys saying no all the time. But those past 3 days here, when I ask about the white label, a lot of people are starting to say yes, and I cannot escape the conversation now, basically. So the market developed quite well in this offering of embedded payments.
Because we're talking about the technology, and I think there's different flavors of embedding, right? You're talking, one is that because if you're a technology provider, they look for connectivity. They could have their own direct relationship with a bank doing that loan for them, or if you're licensed, you might have it white labeled and have it offer it yourself. I guess there's difference between you. So I wouldn't say that it's stifling a potential for growth in Europe. What do you think, Charlotte? I know you've looked at US versus Europe. Why do you think we are so much behind?
So I think as you think about the full PayFac model, right? So indeed, in Europe, you will need to also get an additional license for that. Is it going to cap the growth? Yes and no. So if you think about the rationale moving into the full PayFac model, that's not that much actually driven by like a massive amount of upside from a monetization perspective. So in other words, if you're already in the PayFac Lite model, it's not going to add like 30 bips to your top line. It's going to add like, some additional revenue upside for sure. But I think like, the core benefit from becoming like a full PayFac is you effectively own the merchant, right? And so as you think about rolling out additional embedded finance products, this is what makes it like really interesting. Again, it's also a question of scale. So for example, in the US, right, so it's a large market, it's like the size of Europe. So to effectively consider becoming a PayFac and completely changing your business model, right, so hiring people for compliance, etc., it's a lot of investment that you actually need to do. You need scale. And so that's like, 1 billion, 5 billions of flows. In Europe, it's a bit different, right, because like it's a lot of different markets that you're covering. And then on top of that, for example, if you're point of sale centric, makes it much more difficult on top of that. So I think regulation is one of the reasons why it's a bit more difficult to like operate as a full PayFac, assuming that you actually have the scale. But again, it's also generally a point around it's such a business shift that it's a key consideration for a lot of software platforms on whether do we want to do that or not.
Okay. The bottom question there, I think, Himlat, if you can maybe mention, because again, Elevon works a lot with ISOs in the US, that's a basically US model. Is that model dead? Because, I mean, for those who don't know the US model with ISOs are basically resellers of an acquirer that don't do anything else but from servicing the customer. They're normally not in the flow of funds, nor are they, so they're not licensed and they're not technologically involved. So what are your thoughts of, is that in decline?
I think fully an ISO just selling, acquiring and nothing else, there's almost very few that actually do that, because I think even ISOs have been seeing the writing on the wall and are trying to evolve. So certainly the ISOs we work with, we're talking about selling not just core acquiring, we're talking about different terminal options, we're talking about additional value-add services, even something like merchant cash advance. So the ISOs are evolving. So full traditional, I think that model, it doesn't work. But I think most ISOs are trying to find additional value-added services. Many ISOs are trying to become ISVs. So often the spectrum we see is you go ISO, ISV, PayFac. So ISOs are trying to add software capabilities to start looking more like ISVs as well. So I think that's where the convergence is going, that hardware alone is not important enough. You need software. Acquiring alone is not enough. You need value-added services. Payments alone is not enough. You need additional embedded finance. So I think that's the trajectory that we see larger
Evolution,
ISOs
almost.
the evolution in ISOs as well.
Sarel, quickly, one thing we haven't talked about is point of sale. And is that, there's, because again, there's a few presentations I was at yesterday, especially the account-to-account payments. And there's a lot of talking. It's like, well, it's great. It's all there. It's just that the customer experience is not great, and especially at point of sale. So we briefly chatted and saying, well, some of the buy now, pay laters have managed to get into the point of sale. So when teenagers are buying their trainers or running shoes, they can use a buy now, pay later. But are you seeing POS lagging behind the online kind of embedded services, or do you see that also picking up?
No, it's a good point, and I remember, MPE for a few years, a lot of the talk was about this convergence between online and offline and omni-channel, which was the word that was used across multiple presentations. I think I'll give at least one presentation about omni-channel here at MPE. And I think this is kind of converging over the years, and we see a lot of the services that are provided online are now provided on POS. The POS terminals become much more complex, much more capable. We're also seeing in Europe as well the adoption of QR codes to move a transaction from the POS into the online world, enabling bank-to-bank transfers, additional local payment methods, and so on. This is something that picked up in Asia, for example, where all the payments are with QR codes, and we're seeing this now being picked up with some of our partners. So this market is converging. We're seeing a lot of the services coming into the POS as well, and POS is a very strong part of our business and the business of our ISVs. If you look into the hospitality space, these merchants have their historically they started with POS, but now they moved into online ordering systems. You can select from the menu through a QR code on the table and pay from the table. So this is all converging into one world and one provider. And I think this connects to another point, which is the infrastructure. When you are speaking about embedded payments, typically, we're coming from the payments world, which is card acquiring, which is transactional based. A merchant sends a transaction, we approve the transaction, and that's it. Where you're moving into embedded payments, you can no longer rely just on a transaction base. You need what we would call, and we offer a ledger system, where the customers not only process payments and get settled, but they collect payments, they can hold the payments, manage the payments, and then settle, use the funds to pay out to their suppliers and so on, to the point where we see people like Molly in the Netherlands now expanding across Europe. They've actually built on top of the ledger system almost like a bank account, where the merchants can store the money, they receive credit, they can get additional funding if they need it, and also start paying out. So you kind of leverage your payments relationship with the merchants into a completely banking as a service offering to your customers. And you can only do this as a payment provider if you have the right infrastructure, because it's no longer
it's my Wise account, which I used to transfer a bunch of dollars. I've kept the dollars and they're paying me interest now. I never could get interest on dollars in the UK before, so definitely welcoming that as a consumer. We about almost ran out of time. One of the things I want to ask you all is we're not going to do the future because we're not going to get it right, and I think everybody's done various future predictions. What I'd like each of you is to give me 3, or more, top embedded services that you see happening now. So starting with you, Charlotte.
So with a little caveat up front that obviously depends on the vertical that you're operating or like horizontal. So I think embedded payments, still lots of opportunities, as you saw on the slide where we contrasted, right, the embedded payments maturity across regions, but also across different verticals, horizontals. So I would say number 1. Number 2, what we now see accelerating a lot is lending use cases, so merchant cash advance. And then oftentimes we also see instant settlement being bundled with bank accounts. So that oftentimes also goes hand in hand. So I would say these are kind of the top 3 that we see a lot.
Okay. Hemlata?
Yeah, very similar. I think I would have merchant cash advance and instant settlement. I would have buy now, pay later. I'd probably say those are the big ones: instant settlement, cash advance, and buy now, pay later.
Okay, Andre?
I agree with colleagues. I would probably add that local payment methods are growing and really important, especially in European countries when the merchants want to expand. So covering local payment methods is really important for us.
Okay.
For me, in this specific space, I think it's onboarding speed, because that's the ability of your partners to scale. Approval rates is becoming very important, very competitive, and the better approval rates, the better conversion you provide to your merchants, and that is important. And the other is risk management, which is very important, especially as you go into the smaller merchants where they don't have any risk management capabilities, and this is where you can add additional value.
Yeah, we didn't get to talk about KYC, risk management, fraud management, but that's a subject, guys, for the next conference next year, maybe. So, thank you very much for your patience. Thank you very much for the amazing panel.
Thank you, Masha.
Thank you, Masha.